Hi, this is Brian Shepard from the floor of the CME Group. Today's action is pretty muted, and a lot of this has to do with what's been coming out over the last week or two, and it's got to do with the dollar and the rollover in all the commodities that we've been experiencing. You know, without real direction in this administration and without knowing exactly what's going on overseas, you know, especially in Greece and a couple other places, it's going to be hard to have a real directional move going forward in the near term. Today's action, we came down to test 56 even, the Globex low. Today's low is 56.40. We opened up at 62 half, 62 even, came down to 66.40, and then we came back through and made a new high up to 68, which took out the Globex high. We're now somewhere right in the middle of that range, doing not very little trading going on. What we see going forward is there could be a potential for another little bit of a jump up. I would say into the low 70s, 1071, 1073 might be an area. On the downside, I think you might have some support if they do take out the lows, some support in that 55, 56, but stops would be underneath 54, and I don't think it's going to go back into the 40s. I base that pretty much on the fact how they shot up on Friday after making the low of the 41 area. It was a good recovery, and I think that put some hope in the fact that they might run more stops going through the upside a little bit, buy stops. Again, at this juncture, it's pretty early to decide, you know, whether you need to be buying the dips or selling the rallies. I don't think that's been determined, you know, as a directional move quite yet. Right now, the consensus still seems to be selling rallies, so for now we'll stick with that. I think the best bet from this point on would be, you know, waiting up into the low 70s. That's it for now. Good luck.
From the floor of the CME Group, this is Danny Riley on this Monday, February 8th. You know what, we put out some great levels last week as far as where we thought the S&P was going to go. We put out that 1066 level, that was the first low. Then we put out 10 half, and that was the next low. And everything seemed to hold in very well. And then late in the day on Friday, the market started to erode a little bit, and it pushed the S&P down to a level that we actually put out on the instant message there. We gave one of the traders was covering some minis down there, and we gave him the 41.43 level. And first low of the day was 43, and then the second low was 41 even. You know, but today it's a lot different than what it was. No, I got to back this up. It's exactly what we said it would be. Late in the day on Friday, we said that the big concern would be that Mutual Fund Monday would come around, and it has. Coming into this morning, I think 16 out of the last 19 Mondays have been up, and if today the S&P closes higher, it'll be 17 out of the last 20. This is an amazing statistic. It's almost as if they're inviting you not to, well, what it should be saying is you should be buying on Friday, but it also should be telling you not to short on Mondays. As we go into the rest of the day, you know what, we've got pretty low volumes here. We've got about 7,000 big S&Ps traded, and we've got about 1,000,001 or 1,000,002 minis traded, with about 250 of that coming in Globex. So you know what, we're a lot quieter than we've been over the last couple of days. We suspect that the market will remain that way going into the close. But again, you know what, we don't want to get caught in selling a quiet market when the markets are like this, and also with the statistics as they are, we really think that the markets are acting okay. Now moving forward, what we're going to be looking for are some of the characteristics that have made the market what it is over the last, you know, since March of last year. And that pattern is a back and fill pattern. That's where the S&P will spend some time going up and down, but also actually making a bottom as it does that. A very well-known trader that came in through our desk today said that he saw, again, this was what we were talking about a week ago, that there's a rising wedge forming underneath the S&P that possibly could take us back up to the 1090 to 1110 level. We don't know about that right now. We're just dealing with Monday, and right now it's too quiet to sell. And right now, in fact, I'm behind the Dow futures here at the CME Group. You know, these guys are trading open outcry too, just like in the big pit at the S&P. Their volumes may be a little lower, but they're just doing the same thing. It's still going on this floor. It's all about open outcry until they can come up with a better way to do it, and this is the only way that we see fit to do it currently. We'll be back tomorrow with more Mr. Top Step updates.